Today is Thursday, April 21st, and we want to talk Tesla. Tesla reported earnings last night. The stock gapped after hours from 975 all the way up to a opening high of just under 1100 bucks. But as you can see on your screen, it traded about 7% lower to close just over 1000. Now that is a 7% move from the intraday high to the low. And this was on a day when the market overall was just pounded. The S&P 500 was down well over around 1.5%. It was down 80 handles. Every stock pretty much was just sold. So the fact that Tesla traded up on the day 3% was fairly significant given the price action across the broader market. Now, what we really want to focus on here is the action in the options market. It was really quite fascinating. We think was a big driver of the stock. So for that, we're going to turn to our hero tool. Now, what this does is it tracks the hedging flow for options dealers in real time. Essentially, it's a measure of options delta. So on your screen in black is the price of Tesla stock, and in orange is the activity from call options. So that's the hero signal or the delta impact from call options only. And then in blue is the put flow or the hero signal from the puts. Now, what you can see is the fact that this orange line gaps higher on the open is a signal that traders were rushing into buying calls as soon as the stock opened, and that corresponded with this gap higher. Now, this call buying could have been from people who are trying to cover short calls. As many of you know, a lot of traders like to sell options ahead of earnings because they want to collect that earnings premium. A lot of people think that implied volatility will crush after earnings because the event is out of the way and you get to collect some money. Now, in this case, Tesla gapped 10% higher and implied volatility spikes. And so if you're short a call, that could cause a lot of pain. But as you can see, as the stock pulls into just under 1100, this orange line turns south, and that indicates that traders started to sell calls. And when they sell calls, dealers are getting short and they may need to start selling stock. Now, around that same time, you can see the put line does trade a little bit lower, which also tells us that there is some put buying in Tesla. So both of those are what we call negative delta trades, and that brings selling pressure into the stock. Now, by and large, that call selling persists all day. The put flow is fairly light. There's one moment here where you can see this sharp line higher. This indicates that there was a big block trade. So for a block trade, a hedge fund or another very large trader would call up a desk like JP Morgan or Goldman Sachs, and they would do the order over the phone, which means that the hedge or the stock that may or may not be bought would be done sort of off the screen. So maybe in a dark pool or something like that. So you wouldn't see that impact necessarily immediately on the chart. So if you kind of eliminate that block trade, you can see that the flow shifted more or less neutral into midday, and then heavy selling flow picked up into the afternoon. So there is this big correlation, obviously, between the overall market being down, but you can see just how closely linked the top of the Tesla stock price today was tied to the fact that we had this rush of call options buying, which immediately flipped to sell, and boom, down goes Tesla stock. Now, how do we know it was call selling? Obviously, reading the price action. That's what our algorithm does here. And what calls were actually sold. For that, we're going to turn to this other tool we've built here, and we're going to focus on this center pane. So this is the volume for 429 expiration options in the middle, and this was the open interest as of last night for all of Tesla's 429 expiration. And you can see that at the start of day, there was roughly call it 4,000 contracts of open interest in the 1,100 calls and roughly 8,000 in the 1,200 calls. But the volume traded on the day for the 1,100 was almost at 25,000 and a similar metric or mark for 1,200. So the volume intraday was well over that of open interest, which tells us that this was new volume, right? This was not someone closing their position, because if they're closing their position only, you would think that the open interest and volume would be closer, right? But in this case, you have much larger volume. And obviously, we're going to have a very high implied volatility level because Tesla was up 10%, right? And so that's going to drive implied volatility. And in general, or I should say oftentimes, that can be an interesting time for call sellers to come out and sell implied volatility, right? If you get a 10% gap in the stock, that's going to drive implied volatility. People may think that the calls are priced a little bit too high, and that can be an interesting time to try to sell call options. Even if you think the stock is going to go higher, just a pause in the stock can lead implied volatility to drop, and that can make you some money on your call side. Now, if you look at just the 422 expiration, you can see similarly there is a huge amount of volume for the 1100 strike for the expiration for tomorrow's contracts, right? And that far exceeds the 20,000 open interest and the start of day. Now, conversely, you can see there was big open interest at the 1200 strike, but the volume was very, very small. It's very light. So overall, you can see that as, again, the stock reached its sort of high point on the day, just under 1100, we know that the call activity likely short, again, because this indicator trends lower, that is the call indicator, we know that there was some big call selling. And also, it just sinks and makes sense that you would look into selling some calls with implied volatility at a high, and that corresponds again with that price side. So we hope that you found this information helpful. If you'd like to try this out yourself, go over to SpotGamma.com, try out an alpha level subscription. You get the hero indicator as well as our daily written analysis free for 7 days. If you have any questions, please put them in the comments section below or hit us up at SpotGamma on Twitter.